Three, two, one. Robbie said we had to give it a few seconds. So there you go. Welcome to another episode of the Advisory Angle with the Stratmor Group, powered by the Chrisman Commentary. So, I didn't know Garth was going to be on today, but he's at least jumping in for a little bit before we dig into our topic today, which is on servicing. I will tell you before I turn it over to Garth for a couple of moments, we've got, you've met Kris van Beever before if you've come to the Advisory Angle, and he's back. And also we've got Sylvia Kennedy, one of our great colleagues at STRATMOR, who's joining us today as well. So we're going to have a robust conversation about servicing. But Garth, I know you've always got something to say. Do you want to give
No,
something?
I appreciate everybody joining. I'm happy to literally say 30 seconds and then turn it over to the experts. For those of you who know me by background, my background really is in origination. So my knowledge of servicing to some extent is the impact on retention, the impact on the origination channel, as well as obviously the financial elements of it. I look at balance sheets and financials of companies. So I understand it at that level. But today, I think it's why we brought in, phone a friend and bring in the real professionals, because we're going to dive a little bit dirtier and a little more detail around servicing, and the two experts are going to be doing all the talking. So for those of you who don't like to hear me talk for 45 minutes, I apologize, because you're not going to hear me talk for 45 minutes. But I'm happy to welcome the group.
Well, Garth, we always like hearing you talk. And
Yeah.
actually, I'm happy that you brought that up, though, because, servicing, I was just talking with a group a few moments ago, and we were talking about the fact that servicing and the transfer to servicing from the customer's point of view is also is sometimes a confusing time. And it could be a time that if you're not handling your servicing really well, that transfer into servicing and that servicing experience can be kind of a rough one. It's one of the indicators that we've seen, Garth, in the MCX findings. That's a big, it'll cost you a lot of NPS if you don't do that servicing transfer well. So we're going to be digging into all things servicing. But Kris, maybe you want to give us just kind of a little opener with some of your thoughts about why is it important to talk about servicing right now? I mean, what's kind of based on the market right now? Why is this such a hot topic?
I think that the number one reason is, in the past, servicing tended to be sort of a back office function. You sent your check in, you had your money spread across investors, you tracked it, you got a 1099 at the end of the year. But as things get tighter, servicing has become sort of a central place where a lot more things can occur. There's a movement to have more self-sufficient self-service with the customer. There's opportunities that are being looked at to sort of, I hate to use the word claw back, but get additional revenue from the investment that's made in servicing. Servicers and subservicers, from a technology perspective, sort of have to complain that a lot of money needs to be spent in servicing, but it really doesn't enhance the overall function of the company. A lot of it's done for regulatory purposes, but there's opportunities to, while you're doing that regulatory change, to take opportunities to relook at what you're doing and align your business and your strategic objectives to your servicing technology, which we all know has been historically big giant mainframes where you had to do what the big ape used to tell you to do. And now there's more and more opportunity to figure out, well, maybe there's some alternatives here. And so that's sort of why it's a good time, because there are some alternatives.
Sylvia, what about your point of view? Why would you say this is such an important topic to dig into today?
I think there's just a lot more options, a lot more things available that we need to make sure that we're staying on top of everything that's there, making sure that your servicing platform is digital, that it has everything that's available. With AI, we're seeing a lot more things, right? With the chatbots, with AI-driven call centers, just a number of things that were not available before that are available, that the customer is now more demanding, if you will, right? They're expecting 24/7 chatbots availability, just continuous improvement that we need to make sure that we're staying on top of.
Absolutely. And it's interesting. I don't know the numbers on this, but when you think about where the market has been, there's a lot more people that are sitting in these servicing pools, right? Because there's not as much action. And so I wonder, this is an important topic, not just from it being a revenue source for a lot of folks out there, but also the preparedness for the opportunities. There was earlier, I think it was at the IMB conference, Garth was talking about a little bit about some of the things that happened when there was a little, I think we ended up calling it a boomlet. It certainly wasn't a refi boom.
Yeah, that 2 to 3 weeks last September, right?
That's right. And so that little boomlet, some people were really prepared based on what they had set up in their, for their servicing to take advantage of that and retain more of those customers and get back that business rather than losing them. As you all know, the retention rates in this industry are typically fairly abysmal. I think historically around 18%, if I remember correctly. And so it is such an opportunity as we do look forward, knowing that, the next opportunity is going to be coming down the road and who's going to be best prepared and how to take advantage of it. So let's dig into it a little bit. Sylvia, you just said something really interesting about, some of the ways that, folks are looking at their servicing pools and how are they servicing them with digital capability and AI. I'd love to hear a little bit more about your perspective on that.
Sure. I know, Garth, you mentioned originations earlier when we started, right? And I know when lenders are looking at originations, you're looking at an all-in-one platform to make sure that your users have everything there. Well, I think we need to be looking at servicing in the same way. Your servicing platform should be an all-in-one platform that gives your borrowers that capability to self-serve, to have those AIs, to give the analytics, the data, to retain them everything in an all-in-one platform. And I don't think that before we were looking at it like this and leveraging that AI with this. So I think it's very important that if you haven't visited that you make sure that you look at that and make sure that your borrowers have all the capabilities that others are able to provide.
So let me ask you, Sylvia, how well would you say that you think most people are doing at providing that and reaching those consumers, right? Because if you've got, I think about it, we're all consumers. I don't know if all of us have a mortgage. I do. And I can tell you, I get very little, if nothing, from my servicer, who shall go unnamed. That's interesting, engaging, pulling me in, providing information of value, causing me to want to check things out, know anything about my home's value or my credit score. So where would you give, Sylvia? What would you give the industry? Maybe I just don't have the best servicer, but how would you score the industry on how we're doing so far?
That's a great question, Sue. I don't know how I would rate them. I would say probably a 5 out of 10, just because some I believe are doing it very well, and others are really still trying to catch up, right? And so I think there's definitely opportunities. We're not quite where we need to be, but there is options there for everyone.
By the way, one thing I'll pause on, we'll put a link in the video to some of the content that's been produced by our colleague Mike Seminari related to MCX or customer satisfaction research we've done around servicing. The one thing that we have seen is that consistently the level of satisfaction in servicing, I'd say on average, drops the longer you're in the servicing port, meaning there's more time to have an adverse experience. There's more escrow adjustments that were not explained well. There's more phone calls that got caught up in IVR. There's more contact with people who maybe didn't understand what happened on the previous phone call. Generally, when they call, the outreach or the high impact escrow analysis period is a big time to potentially wow them, but it often is a time to see those NPS scores drop. That's what we see in the data. I will say, though, for every cloud, the silver lining. I talked to a client today whose experience, and they have the data to prove it, is the opposite. The more they are in the servicing system, and this is a client that acquires more loans than they originate, the longer it's there, the higher they're sat. So they are super bullish on the fact that they are reinforcing and maintaining a high quality relationship. And guess where that's showing up? They have very high recapture, despite the fact the vast majority of their loans are not retail, meaning they were acquired from somebody else. So the consumer never chose to go with them. The loan got bought. So it's all that drama. Yet the longer they can keep having a positive relationship, their retention rates have gone up. So it is possible, but it is not typical. Typical, it keeps going down because the consumer, when they have that need, it's often not handled in a wow way.
Okay, so what would you give them? I mean, what would you give the industry? I mean, Sylvia gave us
Oh
all
yeah, and I think it's a 5. I'm just saying, hey, there's some 2s and there's some 8s. So it averages to 5. So there you go. We'll do a chart.
So Sue,
right.
I want to add on a comment to what Garth just said. And I think there's a significant nuance that we all understand, but I'm not sure we realize how much impact it has on the consumer and borrower. And that is, the borrower doesn't choose his servicer. The servicer is as a result of the movement of your MSR. So if you have a business strategy to sell and move that around, that negatively has the potential for negatively impacting the borrower. If you have a strategy to retain, and then, like Garth said, have a longer opportunity to interact with your consumer, you've got an opportunity to apply different strategies to make that experience better for the consumer. But it is a strategy. It's not something that is easily done with the movement of MSRs around the industry. Now, in the future, when you've got the ability to have MSRs move around as cash moves around in the banking industry, which we're not anywhere near that yet, for example, with blockchain, I think that's a different story. But right now, where you're reliant on individual servicers or sub-servicers handling a physical transfer of that loan from lender A to lender B, you've got a possible opportunity to either wow the customer by doing a better job than the prior servicer, or to step on your foot and give the consumer a bad experience and therefore, propagate that 5 score. If you retain them, you can then work with your strategy to raise that score to an 8 or a 9.
Right on. And Kris, you actually, one of the reasons you're here is you actually had the opportunity to write a terrific article really recently, our latest Insight article. I'm going to put a link in the chat here, but don't all go off and read it right now. Stay put here, but read up on it later. And Sylvia, I know you work with just, some of the best lenders in the nation. And so you're seeing in real time some of the challenges and opportunities. So I'm going to put the link in the chat. But Kris, can you, let's start to kind of walk through what you are seeing some of the best do. I mean, I think you touch on some of these things in your articles, and Sylvia, you mentioned this a moment ago. It's like some are doing it so well. So if we look at, we like to talk about operating models, at STRATMOR, strategic operating models, and there are servicing operating models that can be extremely successful for that retention and recapture and referral business. But Kris, can you start to walk through what are you seeing some of the very best out there do, so that some of the folks listening can start to make moves in that direction as well?
I think the first is in the process of doing servicing transfers, the ones that are doing it well are doing a lot of automation. So it takes a lot less time to physically move that asset into your portfolio. The other thing is people are spending a lot more time in proactively communicating with the consumer. I think we saw a text pop up in here, a chat, that they just closed and they had some good experience with their lender. I've in the past had very good experience with a lender. I can't say who it was, but within 6 months of closing on my loan, I got a phone call that said, hey, we've got a different program here. We can change your loan. And by the way, we can reduce your rate by a half point. And it's not going to cost you anything. We won't extend your loan. So it was a positive experience. And guess what? If I ever had my choice of who to go to, it would have been that servicer. But again, getting back to not being able to choose who your servicer is sort of problematic. But once you are having your loan serviced and can provide that exemplary experience, or that forget the term that Mike uses with customer experience, I think that that's a good opportunity. There's a question in the chat about modification or refinance. Mine was just a modification for that case. It wasn't refinancing, so there were no extra charges. Just like recasting a mortgage. I mean, you don't hear about a lot of that anymore, but they used to do that.
See,
You know,
Right.
as good
Chris,
customer
Chris
service.
Chris is big time. He's a big jumbo or something. So apparently, they
Ah.
just come in.
Well, no, so
personal information don't share, Chris. But I'm just.
No.
I'm saying you don't have to trust me because I don't have a mortgage right now. So
Oh, good. Now you're really big timing us. All right.
Okay, wow, we're really getting there.
See-
But it's an interesting point that you brought up though, because you mentioned some things about communication and expectations. And I want to ask Sylvia a little bit about that, because I think that is, as Garth mentioned, as we see in all of our data, it is one of the biggest pain points is, the consumer not knowing what's going on. And I think to your point in the chat, Bill called this out. It's very interesting when we ourselves in the mortgage industry, at least Chris, poor folks like me that have to get a mortgage. It's interesting to go through it yourself, right? As a consumer.
Can I add one more quick point that a really good servicer provided? They did their escrow explanations with personalized video for the consumer. So they literally had a video that explained the consumer's specific experience so that it was very clear, written in 12th grade English and very clear to understand. And it was, very positive on the consumer's part.
Okay, so we've heard Bill in the chat say, actually got a phone call. Now we don't know for sure. Was it an AI agent, which we're kind of fascinated with right now at STRATMOR? We're looking at this a lot, calling, or was it a real human? Who knows? Chris, you just brought up, getting a video, and a video always can feel real personal to explain how escrows work. Sylvia, what are you seeing on that?
Yeah,
end?
no, I think just to echo what Chris said, right? I think number one is proactive communications, especially during a servicing transfer. Proactive communications, continuous monitoring. Once you have that loan, to Chris's point, they reached out to him and said, you qualify for X or whatever it is. So I think making sure that within your servicing platform, you partner with the correct third-party vendors that are able to offer all those things, that can do the monitoring, that can do all these different things for you, from analytics to credit scores, whatever it is, right? To be able to offer that continuous monitoring and continue to connect with your borrower is great. Another thing that, Chris mentioned his experience. My servicing company also, gives me monthly emails, monthly communication on where I am, where I can improve. I can link my bank accounts, I can link my credit cards, it tracks my spending, just a number of things that you can do to offer that, again, retains and makes me happy with them. Now, I know that doesn't guarantee that I'm going to stay with that servicer, to Chris's point, right? Not my choice, and they can sell my loan at any time. But you can certainly stay with them and retain a lot more business, not just for servicing, but for other things that you offer. So I think that's important to keep that in mind as well.
Okay, now that's an interesting point. So you're talking about even from a banking perspective, right?
Correct.
Okay. That's a really good point to call out, because again, we definitely have seen the numbers that when the consumer actually has a need, and they start to do outreach, whoever is able to get back to them most quickly, it's something like 78% of the time they're the ones who actually win the transaction. So let's go to, for a moment, some of what you're talking about, Sylvia, I want to dig into, because there are a lot of companies doing a really good job right now with that amount of data. If you think about the amount of data that's in those servicing pools and what you know about those customers and the kind of monitoring that you can do, and you're taking that loan against market rates, against home values, against maybe life events, against different triggers that are going out there. Again, there's a list of wonderful technology providers out there that are doing exactly that. And part of what we've seen lately too is the rise of, and Sylvia, you're touching on this, I'd love to hear both you and Chris talk about it, the AI agents that are making both outbound phone calls for opportunities, as well as accepting inbound phone calls, and doing a really darn good job of it. Can you talk a little bit about that? I mean, either one of you want to jump in on that, and just kind of how you're seeing those opportunities playing out with the clients that you're working with.
I'll go first. I'm not sure I've seen personally the the proactive AI agents. What I have seen are AI chatbots that provide information, but then potentially transfer to a human. I do know that there are some AI agents being applied behind the scenes. Years ago, before AI, there was a program called Early Resolution, which monitored some 2,000 variables, which AI would be great at today, of the potential for consumers of going into foreclosure or default. And so by looking at those variables and providing an opportunity for the servicer to proactively reach out and see what they could do to mitigate it or potentially create a path so people don't throw up their arms and say, I give up, I think is a good opportunity from a customer support perspective that, hey, my servicer does care about me. They're willing to try to help versus they're just going to come slam and take my house, which I think is a valid fear of some folks that aren't familiar with our industry.
Agreed.
Yeah, no, I would agree, Sue, same thing, right? I've seen a lot more of the chatbots available before an agent needs to step in, but it's very seamless, right? The borrower or consumer can interact and most of the time get the majority of their questions answered before they get transferred, right? And so sometimes, at least for me, it is easier to just jump in a chat box and not have to get on a phone call, right? It's the now and getting the answer. So to me, that if that's not available or if it's not very advanced and it's not giving me answers, to me, again, I want to pick up the phone as the last effort. Give me responses on the spot, right? One of the other things that I've been seeing is the AI-driven IVRs. Now, I haven't seen a lot of that. That is more new, but it is something I think that I would love to dig in deeper from a STRATMOR perspective and find out what that does a little bit more.
But I'll go ahead and offer one up. The one that we have seen as a first step for a number of servicers is where the call that is already being recorded, because almost all services are on recorded lines. So it's unlike in the retail origination space where people are running around on cell phones. It's on a recorded line, it's transcribing the call, it's flagging the follow-ups, exactly like we're all using Copilot, except it's doing it for this use case of somebody calling in. It's scoring it and flagging the compliance issues. So in other words, the focus was risk first. Identify risk. You missed a default transfer, should have been sent to the default line. This customer really was talking about their payment, but what they really meant it was their escrow. Have the escrow people call them back. So the AI is creating actions to try to drive a better customer experience because it's listening, monitoring, and analyzing the calls as close to real time as possible. The next evolutionary step is then convert that to an agentic AI, which is the AI is actually having the conversation. So I think the first step is monitoring the conversations you're already having and begin to build the knowledge and the rules. And the second is then extending to have the conversations themselves.
No, that's right. It's interesting. So Pratik just made a comment here saying, I agree with Kris. AI is better used at identifying at-risk borrowers and offer them short refi or have loss mitigation discussion. I agree. There's so many applications of this. And what Garth just said, it is interesting because we actually are seeing, agentic AI that it sounds like us. It sounds like us talking right now. And to Sylvia's very good point, I don't care that much about I don't even care if I know it's a bot or if I can get a fast answer, if I can get it via chat, if I can get it via a bot, if there's information being provided to me. I don't need any more friends. I'm good. I don't need to, again, I'm good to get the information any way that I can, but I am shocked at the speed at which it's advancing and literally sounds like a human being, raising up opportunities, plowing through the objections, and an objection that might turn a human back away. The AI agent keeps going and keeps saying, but it's only going to take about 5 minutes if we could just do it right now. I mean, Garth and I have heard live recordings of this where it's pretty unreal. And so I think whether it is being done with a human being, Bill shared a cool experience, again, mentioned it in the chat where he talked about, an actual human, we think, called, left their information. Here's my callback number. Here's my name. And I definitely know of some lenders who are talking about hiring some folks They don't have to be, like incredibly, high paid or individuals, but people that are just folks to check in on people. Do you have any questions about this? And sometimes if you end up having to make a transfer, fine. But the rate at which the AI is advancing to be able to both proactively seek out opportunities as well as looking at the risk, did a payment get missed? Is something misapplied? It's pretty stunning how fast that's happening. And I think, Sylvia, you said something earlier about this is now the expectation, right? The clients now have an expectation that they're going to be able to get their information on demand. So that's going to be an extremely important component.
So I'm going to suggest one other thing that I'm not sure I've heard any lender do, and that is using AI to handle the escalations and issues that consumers have. So for example, if my mortgage payment was taken out twice by an automatic withdrawal, and I want to call and get that resolved quickly, that's something an AI should be able to do very easily, and versus having a human take 30 days to get that so the money goes back in my account. And that's a real life experience where a human took 30 days to get it, where an AI could have very easily seen that that payment was taken out of bank account twice and put it back in right away. So I think there's some opportunity to operationalize some of this improved servicing capabilities without a lot of effort.
Want to encourage people, by the way, as we're going, we've got about 15 more minutes. If you do have questions or comments, please put those in the chat. I'm trying to keep one eyeball on that as we're having this conversation. So please continue to put your comments in there. Any questions, any input, any feedback that you have, it's really helpful to this discussion. Kris, can you talk a little bit about, you talk about some very interesting things in your articles, but what are the, there's different servicing models and, whether people are outsourcing or doing in-house. Again, what are you seeing right now? Kind of where are some of the trends and what seems to be working out, working out best right now?
Okay, so there's the classic primary servicer where everyone has the big iron behind it, like MSP, and sub-servicers are built on top of that. The next level are the ones that are building modular capabilities on top of that legacy platform to sort of extend and expand. We all know that the core servicing platform doesn't do 100% of what it needs to do for servicing. So they build these modules to make it easier. They build more user-friendly front ends on front of it, so you don't have to interact with the green screen. And then the next trend, which is more recent, which is companies that are out there trying to build cloud-based servicing platforms for replacing these mainframe. And at the same time, there are some other companies out there that are looking to do a cloud-based platform for themselves. So there seems to be interest in moving away from having somebody else do your servicing. But it, again, all goes to the strategic objectives of your organization and what you want to do. Sub-servicing gives you the benefit of economies of scale. It gives you consistency. It gives you confidence in regulatory controls. But you lose the ability to have that if you want to have a white glove, hands-on participation for the consumer. You don't really get that with sub-servicers. And so there are some lenders out there looking to bring servicing in-house. That tends to be a very expensive, complex proposition. And in many cases, when it comes down to the end, the financials just don't make sense. But there are still people that are looking to do that. So I do think that the current trend is to see which sub-servicers and servicing platforms can be rewritten or rebuilt using cloud technology. There's one of the top 3 that's currently doing that now. I'm assuming that the others are going to follow suit fairly shortly. But those are the sort of the main trends that I've seen with interactions with our clients.
Sylvia, there's a question I'm going to send to you in a moment that came through the Q&A. Is there anything you want to pile on to what Kris just shared, or do you want to get right to the question?
Yeah, no, I just answered the question on the chat. Just mentioned that AI, I think the question was regarding what can AI do in evaluating, purchasing different portfolios, or what can it do? And so, yeah, there's just a number of things that AI can help with this, right? At looking at the criteria based on what you give it, right? So a lot of it can also be programmed, but identifying likelihood of first payment defaults, identifying risk with the portfolio provided, identifying areas of lower or declining values, just a number of things that can be analyzed with the AI tools. I hope that helps.
I think that does. Kris, anything to add to that? That question that came in?
I think we've talked before about AI and the differences between what large language models are out there that allow for sort of chat interactions, questions and answers, evaluate, and then the AI agents, which are taking it to the next step where you've taught this model to not only answer the questions, but then act on those with very minimal human interaction based on parameters that go beyond rule-based systems, which we've had in the past of, if then else logic being programmed in, where the AI actually learns for itself that when I do this, this is the right result, and when I do that, this is the result, and over time they get better at that.
That's right.
The challenge with both the large language model and the AI agents is they both have to be trained with very good data. Otherwise, you just propagate the historical behaviors of the data that you're feeding it into. And the simplest example I'll give is that if you ever ask an AI to create an image of a clock face, they will give you a clock face that shows 10 after 10, because 98% of the images in the world for clocks and watches are set to 1010. And that's the data that it was trained on.
That is a weird example, but I was thinking to myself that my cool little Samsung watch that I just got, digital, it was set to 10:08, and that's its default that it goes to. So kind of weird. But
that's about the reality of the thing.
Okay. Well, what I want to do in a moment here is really move to the folks that are listening. We've got a lot of different types of listeners on these calls. We've got people presumably on this call who are they're loan officers, they're in executive leadership, some folks that might be in technology. So knowing that there's a broad mix of people on this call who have varying degrees of influence into what their company does on servicing, I want to ask both of you, what are some of the most important things that people can be looking at and should be looking at as we head down the road, in this very interesting environment that we're in on so many levels, knowing that this is so important to so many lenders to engage in it and not just be doing it, but to be doing it really well, because the competition, it's tough and getting tougher out there. So I want to ask both of you, what are some of the top things that you would recommend that the folks on this call would be looking at in their own organizations and bring to the table for their leadership to consider?
Sylvia, I'll let you go first.
Yeah, sure. Thank you. So I would say the first thing, Sue, is make sure that they are reviewing their servicing platform regularly. Make sure that they are staying competitive. Make sure that they are offering what is needed for the borrowers. The list continues to grow, right? So I think it's not getting complacent with that. But one of the things that I did want to say is we've talked a lot about making sure that your borrower has access to some of the new AIs. One of the things we have not touched on is making sure that you give your employees in the servicing world the tools that they need, including the Chat GPT and all of these things. One real easy fix that I think everybody can take away after today's call is, I think Garth mentioned Copilot briefly before in one of his conversations, right? There is the free Copilot that everybody has, but there's also a licensed Copilot. So take a look at that for your teams. If your teams are not leveraging that today, look at the licensed Copilot through Microsoft. And one of the things that one of the lenders or servicers that I've worked with is they got the paid license. And they were able to then work with their IT department to link all of that to their job aids, to their procedures, to their videos and their guides. and gave that access, that license access to their users. And so even when they get a call in from a borrower, they can quickly use the ChatGPT to be able to search all the procedures without having to open or anything and give that response back immediately to them because it reacts real fast. So I want to encourage them to, again, if you have Microsoft, engage and find out that licensing. It is very inexpensive, and that's one way where you can begin leveraging that AI and that chat box immediately to your users.
That's a great suggestion. And I love, by the way, that you called out, you know, two really important things that you called out. Number one, just don't be complacent. Don't expect that you think it's, you know, if sometimes somebody way back when went through everything and went through the journey and it all seems great. If you are not looking at what that journey looks like on a very regular basis, chances are pretty good it's not a very good journey. And I love that you also called out the employee. You know, we've often said that the, you know, customer experience that someone has, servicing or otherwise, is never going to be any higher than what the employee experience is, right? Because, you know, you've got these employees that are there that may or may not be enabled and equipped or even educated as to how to serve the customer in the best way. So really good call outs, Sylvia. Kris, what else have you got for us?
A few things. I think it's very important to make sure you align your strategy with your servicing operations. And as your strategic objectives change, align your technology with that strategy. That way, when you go to evaluate some of these other technologies, when you're looking to either rethink your subservicer relationships or decide whether you want to change your operating model or go from a transactional environment to a more interactive, automated environment. Make sure that the AI that you do invest in has got significant governance controls over. You know, Sylvia mentioned Copilot. Copilot is probably the safest, I'll say that safest AI to use a large language model within our business because it is retained within the boundaries of your Office 365 environment, which normally is encrypted, normally is not shared with the rest of the world. Any of the other AI tools that are out there, ChatGPT and these other tools, are literally in the public domain, and anything you feed that model potentially goes to train the model for other people. So you never want to use any proprietary or confidential information when you're using that AI large language model. I think that making sure that you consider the fact that we know that the current legacy platforms restrict your ability to be flexible with your strategy and your consumer, to keep your eyes very tightly aligned on these new cloud-based platforms and evaluate them and look at them. The truth is that there are a lot of different technologies that make up a full servicing platform. You know, I counted 60 to 70 for one subservicer one time. That's a lot of technology to integrate. And ideally, you'd like to have one platform, but over time, I think we're going to still see the need for integration. So partnering with key players in the industry and making them more of a partner than a vendor is probably very key, especially in this time of, you know, flux with the new servicing platforms.
Agreed. If there's any final questions or comments, please pop them in the chat because we're going to wrap up in a few moments. But would encourage people to check out that article. If you're watching the replay of this, you can just go to our website, stratmorgroup.com, and you can find Kris's article under resources and the current insights report. It's a like I said, fantastic article that really digs into this a lot in depth. And Kris, I love the way that you ended the article. You were talking about basically what's your next move. And the comment that you made is the question isn't whether to act, it's how and how fast. And so I would encourage folks listening. This is something that STRATMOR is doing all of the time, is helping, you know, pressure test and stress test what's happening in your organization. And if we can help you take a look at your servicing strategy, that servicing experience, and really dig into that with you, it's certainly something that the folks at STRATMOR can do. If you're listening and you're a vendor saying, oh, I wish that they knew about our technology, certainly would encourage you to as well. You can reach out to us on LinkedIn And be happy to get back in touch with you, hear a little bit more about what you're doing. We have some really good programs available for solutions providers and partners in the industry, as well as working with lenders. So I don't see any other final questions. And so anything further, any other parting advice, Sylvia, before we leave?
I think, again, just repeating what you said, Sue, is making sure you do an analysis of what you have today, so you guys don't fall behind, and go read that article.
Yep, there is, like we said, there's no better, no, it's a great experience for someone in the mortgage industry to go through the process of getting a mortgage, which I am doing currently. And it is a reminder and wake up call that we talk about transactions and we talk about units, but there's a real actual human, even, you know, people that, I mean, I've been through it lots of times. I've done, you know, how many mortgage transactions in my career. But when you are in it yourself, there's a real human with real stresses and real, you know, pressure behind the scenes, including as it goes off into servicing. So Kris, any parting words of wisdom from you?
I think transparency and consistency and good communication, both internally and externally, is the key. And it's not a question of whether AI is going to be involved in servicing. It's a matter of when, and it's not if, because it is here to stay, and it's key to learn what you can and how you can use it, because it is also has a great, just like anything that's powerful, with great power comes great responsibility. There's a lot that can be done for positive and negative using AI, and so it does need good AI governance, especially in our industry.
Spot on. So want to encourage you, go out, read the article. You can contact us on stratmorgroup.com or reach out to any of us via LinkedIn. But thanks again to the Chrisman Commentary for powering the advisory angle. And hopefully you will join us next month when we'll be talking about something else new and exciting. You never know in this industry, and you never know when STRATMOR is involved. So we'll be looking forward to it. And thanks again for joining us. Take care, everybody.
Thanks, Sue. Bye.